And that means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, looking at charts, talking economics, indexes, sectors, commodities, pretty much anything we think it is important, relevant, and interesting. Break it all down, analyze it on a daily basis so that you guys out there can better run your daily routine as a trader. Welcome out to the show here on a Wednesday. And as always, we've got Tyler Craig joining us on his standard midweek appearance here on the Halftime Report. Tyler, how you doing today, sir?
What up, Timmy? Doing good. Excited to be here.
Interested in these markets. It was a little 2-day hesitation, and then we just scooped it right up here this morning. Obviously, we're not up like 3%, but it's a nice little bounce. So we'll have a conversation about what's going on in the market conditions. Interested to hear Matt's thoughts on the Netflix earnings, Verizon earnings, some of those roundups as well. Matt, how you doing today, sir?
Doing fantastic, Tim. Excited to be here with the crew to break down the market activity today. And have some thoughts on Netflix, but more questions on Netflix after their earnings announcement. And honestly, as when you're thinking about it as an investor, I don't think they're all negative.
Yeah, we were having a chat before the show, and we'll get into it here in just a few minutes. But I think there are some interesting questions that need to be answered. Some of them are positive. Some of them, maybe we don't have all the clarity on yet. But we'll chat it up, and we'll break that down when we get to Netflix.
Gap down, obviously, the market sells, but I do think there's some positive takeaways from Netflix's earnings report.
Mm-hmm. Yeah. And before we get too far into the show here, one real quick thing I like to do up front is number one, any beginner who's here for the first time, make sure you click subscribe, click the bell, come back and join us. We do the show each and every day. The markets are live at 12:30 p.m. Eastern time. If you're a veteran coming on in to the show, hashtag Team Tackle right in the chat. And in that chat, I have dropped a link to our new podcast we call The Huddle. The Huddle podcast is a daily podcast, about 10 minutes a day. You can get through all of the content and get the top 5 news stories that are impacting the markets. Usually pop in there about noon. You'll see that huddle right there. You can play it right from the website, or up on the top right, Tyler, you can go to iTunes, Spotify, Google Podcast. It's going to be on any of your favorite podcast apps as well. So make sure you're supporting the Huddle, click download, and get those news stories on a daily basis. Let's get down to markets, guys. Let's rock and roll. Let's start just with the cash open here. And Tyler, give me a technical read, including the intraday. But you can start with the intraday if you can. Markets were drifting a little bit. I was reading the news this morning before the markets opened up. Futures markets were down just a hair, and then boom, cash market opens up at 9:30 a.m. Eastern, and the buyers did come in and buy up this dip, and we broke out of intraday resistance. We're now running. We're up about 0.5% on the day. What are you reading in the technicals here, Tyler?
Sorry, I got my kid banging on the piano upstairs. I like it, Tim. I actually wouldn't have minded a couple more down days, quite frankly, but you got to be impressed. I think it's a continuation of what we've seen, where selling has just been short-lived for the last month or so. Look, yesterday was a little nasty, especially in small caps, which we can go look at small caps here in a second. But I don't know. This looks pretty healthy to me. Little 2-bar drop. Pop right back up on the 3rd bar. I think if you were concerned that this would be a deeper retracement, at least so far, those concerns have been laid to rest. So little 2-bar pullback after a monster run, I think, is about as clean as it gets. I don't see much to be concerned about here. And I am impressed how quickly it bounced back. I am impressed that we're at the high of the day. The intraday chart is quite bullish. Nice 5-minute uptrend. So for now, you gotta be betting on the bounce, I think.
Mm-hmm. Maddie, what about you? Just either intraday conditions, the daily chart. We had 2-day hesitation. We came down. It's been finding some support, especially if you back that out to like an hourly chart here, Tyler. A couple things on the S&P 500. We'll look at all the indexes as well. But here we are. Yep. It was trying to develop that support zone over the last couple of sessions, Tuesday into last night, and it did that, and it did bounce here today. Matt, how are you reading the bounce here this morning?
Well, and that's what I'm looking at right there is that intraday chart, Tim, and you're taking a look at kind of yesterday's price action that was coming down fairly aggressively, and then it actually started picking up some steam. as we started getting into the Asian market hours, it started selling off pretty aggressively. As you started getting into those European, as you start getting into the European hours, you start to see a little bit of slowing momentum. You start double bottoming there right around 41.10 in the market, 41.15. And then, you know, as you're coming into the US market hours, you're testing that key support zone. And then the US came in and just absolutely did what they do best and just destroy absolutely everything and just bull. And that cash open was extremely strong, but it was extremely strong on the backs of the slowing momentum coming out of the European hours, coinciding right there into the same support level that was obviously an old support level last week, kind of confirmed on the overnight action last night. And then the US markets come in really strong. And you got to like this type of price movement in the day. You look at that daily chart and you see that consolidation over the last couple of days. Now with the market doing what it's doing today, you're looking at this as a high base. You're looking at this as a little bit of consolidation, and maybe we get another 1 to 2 days coming into the end of the week, and then we have a really good breakout channel coming into next week. That's ideal scenario coming into the rest of the week. A little hesitation coming into a real good technical condition for next week. But that's where we're at today based on what happened on the overnight. If that did not occur, you're looking at a bullish retracement. Right now, you're looking at the breakout because the intraday held. That breakout is still legit.
Mm-hmm. Yeah, definitely developing into that high base consolidation pattern. And I believe that 9 EMA is about right where those charts are.
You know, Tim, I made the statement in the pre-production show when it was just you and I talking, and I said, you know what, the more defense it plays at the highs, the more defense it plays, right? It's justifying that previous leg, and the more defense it plays, watch that 20 period moving average catch up to it. Mm-hmm. The stock market has not enjoyed spending this much time away from its 20 period moving average really since the election. And so watch that catch up to it as well. That's an indication. It shows you how strong that previous leg was in terms of that upward movement in price. We extended so far from your short-term moving averages, it might need to consolidate a little bit, and you're seeing the evidence play out right now.
Tyler, can you flash me through all of the indexes and let's have a conversation just about what you're seeing from a relative strength and weakness perspective? Obviously, the Russell, like Matt, you've been talking about, has moved into consolidation range. It didn't catch that upper end of that breakout yet. And so the character of that chart has changed. The NASDAQ has a slightly different read than the S&P and the Dow, which are very similar. But Tyler, give me your technical read if you can.
Yeah, I think so you're seeing the area that got hit the hardest yesterday, which is small caps, come back the strongest today. You've got to be pleased by that because this is the area that's been getting hit the hardest. Energy had a breakdown yesterday. Financials didn't look that great. Some of the momentum areas haven't been doing as well. And yesterday did not look that great. I mean, you broke a short-term support zone and really completely different posture than the S&P 500. Which is maybe deserved. I mean, small caps went up a ton after the election, so I think it's okay for some backing and filling, but you always get a little bit nervous when you take out support zones. 2,200 was a short-term support level here. And so if you went to bed last night wondering, hey, you know, are we going to see a bigger sell-off in this area of the market? I think you wake up and again, your concerns have been placed to rest here because it's popping right back up. Still overall neutral, but for now we've kind of staved off a bigger break, support break here. So yeah, back to neutral for me. I mean, the energy sector we'll talk about here in a second because that broke support yesterday as well. But I'm happy with this bounce back, and I think it puts you back into the just digestion consolidation mode. And by the way, now you could draw a line at yesterday's low and say, look, for this to maintain somewhat of a healthy posture, let's not go back and break yesterday's low. Let's let this be, the failed support break and get back to being a little more constructive. That would be your bull scenario. I think you take out today and yesterday's lows, and then, you do have other support zones, but it just looked messier than it really needed to.
Matt, you want to add anything to the Russell? I mean, probably positive 45 rating. I would probably, if I had to rank this, Russell, here, flat
Yeah,
to neutral.
for
Yeah.
me, yesterday meant quite a bit in terms of that violation. And you saw the same type of price action. It wasn't like the Russell 2000 performed vastly different than the rest of its counterparts in the market. The difference was the S&P is at resistance, and it's coming down versus the Russell 2000 is trying to fight for some degree of support. And so when you violate this this support level at 2200, even if it breaks back up above and starts showing some bullish type intraday analysis, you're going to get the exact same chart on the S&P, but the difference is you're going to be breaking out of an all-time high with clear air, versus on the Russell 2000, you're going to be fighting up against many different levels of resistance until ultimately you do break out at 2300. And that's that's kind of the sad part about the Russell 2000, if you want to use that terminology, is the fact that one day, it might have been just one day, but now the fight back up above just to recover that one day puts the S&P breaking out, whereas it just puts this right back into neutrality. So to me, the Russell 2000 still lagging. Yeah, it's going to recover a little bit more today because it did go down a little bit more yesterday. But I do think that violation yesterday kind of just added a little bit more time that the Russell's going to need to really find that great technical breakout. Whereas you give a trader 2 days on that S&P chart, they're going to be looking to rock and roll coming on Monday.
Well, and the changing character here is a part of some of the components of the Russell that Tyler's talking about. And Tyler, you've referenced this in the past. You mentioned the energy sector a minute ago. I was going to go to it later, but let's do it right now, because that breakdown yesterday is partly due to this energy kind of weakening chart. Now, I don't think this thing's done yet by any stretch, but you got to call a spade a spade. This has had a changing character, and that breakdown yesterday at least has to raise a technician's eyebrows and take a peek at this. Tyler, how are you reading this?
Yeah, I mean, if you think about it, this is as weak as energy has looked since this whole bull phase began in November with the vaccine stuff. So, look, you may not like it. You don't have to like it. It would have been easier. The whole thing with the reopening and energy and oil stocks coming back, it's played out very well. I think it just goes to show that, look, no pain, no gain. If you want to ride something long term, it's not always going to stay in an uptrend for 6-9 months, a year. You have fits and starts, and the resolve of people that are bullish on energy is being tested right now. And how you deal with this for open position obviously just depends on what your time frame is. But it ain't a good look, man. We're below the 50, we're below the 9, we're below the 20. It's just been a continued deterioration. We're a far cry from where we were a month ago, and so you got to respect it. Now, I'm pleased by the bounce back today. Again, maybe this is a fake out, a false support break, and we come right back up. But to Matt's earlier point, it's got work to do. You can't buy it on well, you could, but this is a risky buy here because you have so much work to do. And so you just got to put this on ice and say, look, energy, if you want me to pay attention on the long side, you break above $50, give me a reason to be a believer that you're going to start trending again. Until then, it's messy, it's sloppy. There's not a lot of great setups in the energy space right now. And the thing is you have better plays elsewhere. So I think you respect the weakness. I think you're happy with the bounce back today. I need to see more, to want to deploy capital here, though.
Well, you do have a very similar read on energy than as you do the Russell 2000. You have the overall weakness, fighting for a little bit of support, violated that support level. Going to take a little bit of time. Everything Tyler said, and you also have major oil and gas components reporting earnings next week in ExxonMobil and Chevron. And just today, we didn't get those Exxon and Chevrons, but we did get Baker Hughes and Halliburton, two equipment companies in the energy space. And if you'll take a look at BKR beat on EPS projections, guys, and gap down. And so you're looking at a company that was already trending down very close to its 200-day moving average, that came out and actually beat their EPS expectation. They came in at 12 cents. They were expected to come in at 11 cents. They reported 4.8 versus 4.8 in revenue. Now, again, this isn't an oil driller. It's it's Baker Hughes. It's an equipment company. But out of all the trash energy earnings reports that we've analyzed in the past year, I mean, utter garbage. And you have a company that beats, that fits the cyclical type argument, and it doesn't start moving. It's not good enough for the investors to beat the expectation. And don't get me wrong, I kind of like Baker at the 200-day moving average for from a couple different reasons, but it still kind of shows me that there's some concern here, that the buyers weren't willing to come in on a report that, no, it's not a rock star report. It's not even a good report. It's an average report, but it's an average report in a market that fits a theme in the market that's been driving the market, in a stock that's went from 25 down to 20 in the last 2.5 months. You would think those buyers were ready to buy, and they just simply weren't. Then you take a look at Halliburton, the bigger brand name in the equipment space, right? You take a look at Halliburton. Halliburton reports 19 cents versus 17 cents. Halliburton comes in and beats revenue. They got a beat and a beat. Now they also got a cheat with a drop in 31% on the revenue year over year. But when you're looking at that 19 cents versus 17 cents, and they beat on revenue 3.5 versus 3.4, and yet the investors like, we're selling? That's gotta be concerning. And you couple that market response with two fairly big names in the energy space, Halliburton and Baker Hughes. Now, once again, equipment companies, not exactly your drillers, but still important energy components, and they both gap down on beats in this marketplace. I get it. Earnings has been a reason to lock in profit, but that's been towards the top end of the charts. We haven't seen a lot of this at the bottom end of the charts, beat and a beat and still gap down. That's got to be a little concerning for the energy space. Now, again, we got Chevron, we got Exxon that can pivot this space fairly quickly. But I think today you're waking up, even with the positive response in the market, saying, wow,
what's going on in energy?
What else do you need? And yes, that's the question that we need to have answered. What else is going on in energy?
Yeah, and I think it's a really good read here. Like back on the Baker Hughes chart, the fact that we are at support after 2 months of selling back near the 200, and it didn't get scooped up, even a percent or two, that is telling to me a little bit. And Halliburton, very similar read there. I can't wait for Chevron and Exxon.
And again, these aren't massive selling days. I mean, Baker Hughes is actually up on the cash open, but on the raw numbers, no investor like that. Like they just, man, it feels like pre-selling decisions, guys.
Yeah, that usually
is what it feels like.
Is where the instincts land. Yeah, all right. I love the analysis right there. And obviously that's why we do look at earnings the way that we do. It gives us a much better perspective on what's happening with these companies, reactions within the sector. And speaking of sectors, Ty, let's move on to technology next if we can. Take a peek at the NQ contract, and the XLK is looking good. It's a little different chart read from the S&P, Tyler. What are you seeing here in the NASDAQ?
A little bit different, but you know, two bar pullback comes right back. Remember, this was a really strong advance, right? Markets ebb and flow, and we had a really good upswing. A little bit of profit taking is not out of the ordinary. Honestly, Tim, for me, I kind of read this the same as the S&P. I think you got to be, if you're a bull, pleased that you know you didn't get a third down day. To Matt's point, when you look at the correction that comes after an upswing, it tells you something about the underlying demand, the sentiment. When you get deep retracements, the market's not as strong. When you get shallow retracements and buyers show up quick, it just reinforces kind of your bullish outlook. So, you know, we'll see if it can move to the top end and break out. But look, we've stopped the bleeding that took place the last 2 days. I think it's good. And you know, maybe the NASDAQ just needs to chill out till you get some of these big tech stocks, these big tech companies coming out next week and reporting earnings. that could really be the driver. But they're not selling Apple. Apple held pretty firm the last couple of days. And so I think you stick with the trend. I don't think you second guess this. I don't think you need to be, picking a top here. I think you let it play out. And today, just for me, reinforces sticking with buyers.
Mm-hmm. Well, and Matt, let me see if I can get you signed up for something here. How about if the NASDAQ and the tech sector played a little bit of back and forth neutral as it's basing around this 14,060 over the next week or so, that when we finally get these reports out of Amazon, Apple, Microsoft, all the big names, that are not the Netflix types that do come down the pipeline here in about a week and a half, then we catch a breakout. That would be a pretty interesting technical condition if that happened in my head. I'm watching this chart and I'm like, it wouldn't bother me at all if it just rattled a little bit, hung out up here, let the moving averages catch up on that 20 period and consolidate. What are you going to be watching for, Matt?
In my opinion, the NASDAQ can do absolutely anything it wants between 13,696 and 14,059.50. I could care less. It could party, it could take a nap, it can consolidate, it could literally do whatever it wants. And the reason is very simple. You look at that intraday chart, and when you're looking down in the NASDAQ, it's a choppy recovery into that breakout channel. You do have some chop there. And so when you're looking at that a little bit, I'm not seeing this as a flag where you're looking to aggressively trigger above an intraday resistance level. I'm seeing this as, because even if you trigger intraday, you're like, oh yeah, we just got to fight against everything else until you get to 14,059. And so it really can do whatever it wants. Now, a deeper pullback here down to the 20 period moving average, maybe we're looking at something differently a week from now. But for me right now, as long as that level that is forming intraday holds today on Tyler's bottom line to the south, you're looking at this as a breakout. And whatever the catalyst is, whether it was Netflix today, which it's not obviously, or whether it's some other big name coming down the pike next week with the Apples and Amazons and Googles of the world, whatever that catalyst is, it can be between now and then. You're still looking at that breakout saying, once it breaks out, then we can see a new leg. Up until then, you're just looking at an intraday gobbled mess right now.
Mm-hmm. Well, and that level that you identified on that support, Tyler, you got a good line right there. As long as it does hang out above that, it can party.
Isn't that K-trade analysis? Like, again, if this was 2019 K-trade analysis, isn't this just, I mean, that's just neutral in the short term, right, Ty, technically?
Yeah, it wasn't 2 days ago, but obviously the last 2 days have neutralized the thing. And you can see it too when you look these moving averages. The 200 is the longer term trend on whatever time frame you're looking at. It's flat. It's flat. I mean, placing trades with a flat 200 MA is tough because the long term trend is no longer bullish, nor is it bearish. So it's an easier trade if this thing gets back above the breakout. It's above all the moving averages. They start trending higher. It's just an easier trade. And so, I agree with you. I think this is not low hanging fruit to buy this right this second.
As of right now, I think you're just waiting on the breakout. Mm-hmm. Same thing in the S&P too.
Mm-hmm. Yeah, I would agree with that. All right, let's keep flashing through the markets here. Let's move on to commodities next if we can. Actually, one quick one. I don't know if you guys saw the strength in healthcare recently. It's been running like crazy. We had an upgrade on that. It caught another nice little move here today. Just has no red bars there over the last 10 or so. It's just been strong. I just wanted to make
do you want to talk about the reason healthcare is running today?
I love it.
Okay. ISRG, please. Intuitive Surgical reports here today. Big component in the healthcare space. ISRG, they come out here and they absolutely demolish EPS. I mean, it wasn't even a fair ball game on EPS. 352 against 263 expectation. Fantastic beat on EPS numbers. Revenue numbers came in slightly north of the expectation, 1.3 billion versus the 1.1 in expectation. About a $200 million beat on that, represent about 18% increase in revenue year over year. So a very healthy and positive report out of ISRG. really kind of just gave that movement we've been seeing in healthcare another, shot in the arm and got going. So it was really on the backs of ISRG's earnings announcement today, and it just kind of gave that appetite towards more healthcare. And we've been seeing that, and that really kind of fit the theme that we've been seeing in very recent technicals, is the strength in healthcare.
ISRG.
I know it brings up a lot of old memories.
This is bad juju for me.
I want to punt this stock into the Pacific Ocean. I could care less about it, but it is a fantastic burner there. I mean, good breakout. Weekly chart looks strong, and healthcare is really benefiting off the positive momentum of ISRG here today.
It's amazing.
Well, this had a three. Sorry, Tim. This had a 3-for-1 split, because I was going to say, I remember it used to be higher price back in the day. So split adjusted, you're talking sucker's almost what, $2,700?
It's
split
a ridiculous juggernaut.
Look at that thing over the last 20 years. It's a beautiful thing. And this 20-year chart actually gives me some context for this.
You see that gap down in 13?
Yeah, you barely can see it.
You'd have to know. I don't want to
know what you're looking for.
I get off this chart immediately. Get off this chart.
Another healthcare stock I saw did report was Tenet. I think they did believe, and Anthem, I believe, as well. So ISRG leading it with a big cap name out of healthcare and doing really well. And the overall XLV is looking very healthy. I think you got to respect the breakout, respect the run here, and it's.
And I saw Anthem, and Anthem wasn't really moving, so I just didn't bring it up.
Mm-hmm. Yeah, I think Tenet might have beat a little bit as well, but ISRG leading that way today. Awesome. Let's go through commodities next here, guys. Is working through the show the way we always do, top-down analysis style. Give me crude oil, gold, then the dollar. We're going to work through it. Then Bitcoin last. CL, Tyler, neutral. Actually, if you take a look at the overall chart conditions here, it's actually healthier than energy, though. The XLE chart is weaker than this one. What's your read on crude oil, Ty?
Yeah, it is, which I think is disappointing because, if you say, well, yesterday energy got smacked because crude oil broke support, you can't say that. I mean, it didn't. And so that's a little unnerving that crude's holding up okay and energy stocks are getting smacked. All the more reason for caution in that space right now. This looks just like noise to me. I mean, yesterday was a high volume day, but it didn't close at the low of the day. I mean, all in all, given the wicks, kind of a neutral day, to be honest. I like the lower wick this morning. I mean, they're coming to bind the dip a little bit. Crude oil is often a range-bound type of commodity, so I don't know that you get excited unless it takes out, 57 and change or the 66. Maybe this is just one big sloppy, dopey range. Yeah. So I don't know that there's much to see here other than just pointing out that, energy stocks sucked a lot worse than crude this week.
Can we make that standard tackle trading etiquette, just sloppy dopey range?
I heard it too.
I just want sloppy dopey. I want the 7 dwarfs right now.
It is a little sloppy dopey.
It's a sloppy dopey. It's I don't even know the 7 dwarfs. I was going to go on it. I was like going to go sloppy dopey this. I'm like, nope, I'm out.
No, you got close enough.
I'm done.
Sloppy, dopey, doji, we could just name all the dwarves candlestick names. Nobody would know the difference.
Nobody would know the difference.
That's right.
Except everybody that loves Disney.
All Disney fans would, traders would cheer it though. All right, let's take a look at gold next then. Obviously we are running here on the GC contract, looking pretty good. Now it's not your 3% day, Matt, but we're having one of those nice little 0.78% days, pushing a little bit higher, holding the trend, and now starting to threaten that 1800 level. Matt, what's your read on gold?
I might be the only bull that does not want 3% up days.
That's true.
Just don't do it. Yeah. Just don't do it. Just hold it back. Hold it back. Hold it back. We'll unleash the dragon when it needs to be unleashed here. You gotta like gold here. Obviously we've been all over this chart from even before it double bottom, because what was happening in GDX was front running what we were seeing on gold. And so you got to love the double bottom on gold. You got to love the breakout. There literally has not been one thing in this chart that you have not seen as consistent reversal etiquette. Mm-hmm. And oftentimes reversal etiquette can be sloppy and dopey and all of that, but you got a pretty clean read here where you need it, and that's at support and resistance. And as long as those readings of support and resistance are fairly clean, it makes everything a little easier from a technical perspective. And so as long as you're now up above those moving averages in the short term are going to be playing defense with you. They're going to be playing support for you. They're going to be playing momentum for you. 9 EMA catches up to the price a little bit yesterday. We see a little bit of bullish mentality there. The one key level that I do want to be a little concerned about is that 1800 zone. That 1800 zone is a significant whole number. It's played a role of resistance in the past. It's also played the role of a support, but it's really about that weekly chart. And, you know, one thing that I do want, and since Mark is not here, I will give him a tremendous amount of credit here. Because if you do it when he's here, it just never stops. Like that's what we will be talking about for the rest of the show. It's just Mark's credit. But since he's not here, him and Frank and their belief in weekly moving averages has truly changed the way I see weekly charts. And I haven't put a tremendous amount of emphasis on weekly moving averages in my own personal analysis over the course of my career. But in the last couple of years, as Tackle Trading, as we've been communicating every single day at Tackle Trading, as we meet and discuss, you know, I mean, if you guys think we talk a lot publicly, we talk a lot more privately about these things. And you know, I'm looking at that 20 period moving average on the weekly chart right there at 1800. We know the 50 period moving average has played a more significant role on the weekly chart than the 200 daily has on the daily chart. It's been more consistent. So I do think you got to be a little concerned here at 1800, but not concerned like to the point, oh man, this is a real true test in this reversal. No, this is just another data point in technical analysis that you need to be concerned about. Mm-hmm. The reversal's done. Now it can be blown apart in future probabilities, but or future situations. But right now it's really just that 1800 level that you're really kind of looking at. You could certainly see some consolidation right south of that as we fight to get back to the 200-day weekly, the 200-day moving average on the daily chart.
Mm-hmm. Yeah, and by the way, Marky and Frank do have very, very strong resolve about that, and it's impacted the way I think about weekly moving averages over the last several years. You know, it's good to have a team of people around you, Matt.
Okay, and just to prove the point that I said the 200 SMA on the daily, that's at 1858. Mm-hmm. No, it's going to be the 50 weekly at 1839. Mm-hmm. And 2 years ago, I would not even have considered that. Today, it's a more important form of analysis than the 200 SMA on the daily is for me, at least on gold.
Particularly on products like gold. That's exactly what I was just going to say. All right, let's keep flashing around here, Tyler. Unless you have anything you want to add on gold.
No, the thing that I'll mention on oil or gold is, I think what's nice about its behavior recently is it's been a nice uncorrelated asset with stocks. So like if you have trades on gold, which I do, it's nice when you have something holding up when the rest of your stock portfolio is getting whacked. I like that it's disconnected itself from stocks of late and is doing its own thing. I want a portfolio full of stuff that's independent, right? GDX2 has been doing really well. You know, that's been following suit with.
It's been the front runner. Yes, from the very beginning, it's been the front runner.
And it's nice when things line up and they work. You know, you follow the principles, you follow the guidelines, and eventually you get paid. And I think that's played out in spades here with gold.
Yeah, I love it. Yeah, and GDX has been that front runner, relative strength-wise and performance-wise, a little bit better chart even than the GC contract. So we'll keep watching those guys. Let's look at the dollar next here, USD. You know, a lot of the strength in gold has come, you know, as the dollar has weakened here, but not on a day-by-day basis. The dollar popped yesterday, so did gold. And the dollar here just looks ugly to me. That old support point is now coming into play, Matt. I'm watching the euro-dollar cross pair as well, Tyler. If you can give me a quick look at that and then come back on the dollar. Many of these crosses, Matt, Matt, that you flashed through last week during the halftime report. That 120 breakout earlier in the week was significant. We're seeing reversal patterns, and that is actually holding there. What is your read on the currency market right now, Matt, specifically the dollar?
Specifically the dollar, I think you're as day by day goes, you're still looking at weakening the dollar, strengthening other currencies. And I just come back to, if we were looking at the euro dollar right now, but it was Walmart, every single one of us would buy it.
We would.
Every single one of us would love that hesitation underneath 120. Every single one of us would love the defense at 120. Every single one of us would love the head and shoulder reversal pattern on the 200-day moving average. Like it would just be an easy form of analysis. And so to me, it does look like, and I have been calling for this, it does look like you're going to see a reversal in the trend of the dollar. We're seeing that confirm, that dollar analysis has been, 1A when it comes to our analysis on gold in recent history. And so I just don't see this short-term movement that we're seeing that's fairly aggressive in the other currencies just reverse, because it's not just like we're seeing this in the euro, for example.
Mm-hmm.
If you take a look at some of the other currencies out there, let's just go through some of the major currencies. Let's go through the Japanese yen here.
That's yen. You
Goes
guys.
/6J.
Oh yes, that's right.
Okay, so when you're looking at the Japanese yen here, the Japanese yen was in a tremendous bearish downtrend.
Mm-hmm.
We had a ranking of -5 on the yen at our lowest level, and yet what have we been doing over the last 3 weeks?
Rallying off
Coming
the lows
off that.
and taking out resistance.
Off that.
Yeah.
Coming and taking off resistance. Take a look. Let's just go down the list. Take a look at the British pound. Go to GBP/USD. Let's do the cross pairs here. You're now fighting up against the left shoulder 1-4 type breakout. You're broken up above all of your moving averages, and you're threatening a breakout. Now put it on a weekly chart and tell me you don't love a 1-4 breakout.
Clean.
Yeah, it's clean. Let's take a look at the Canadian dollar and talk about that potential breakout above 80 cents. Or let's take a look at the Swiss franc and talk about the strength that the franc is having. Or let's talk about the quadruple bottom the Aussie dollar happened.
I want to play a game.
Like I can do this all day long. The point is, when you see all of the currency charts start doing simultaneously the same things, it's not just, oh my goodness, we had a European economic report and the euro start moving. You're seeing things happening against the dollar, not pro towards any single currency, but negative against the dollar.
And I do love the analysis, but Tyler not getting the symbols right has prompted me to want to play a game with him.
No, it's not fair. It's not. No. You can only play the stock symbol game. The currency symbol game is a vastly different game.
Well, he's
right.
got a 50-50 shot. It's like, which currency is first, Tyler? Dollar, yen, dollar, CAD, dollar.
Which currency is the base currency
currency.
Which currency is the counter? Dude, you can't ask that to non-currency traders. That's not fair.
Not fair.
I'll default to those futures. All right, that's what I'll default to.
That's like a real estate individual who specializes in wholesales to come and analyze a commercial property. Like no.
Fair enough. All right, but I do like the
Tyler. I
charts
saved you.
in many of these components. Tyler, he did save you from me.
Tim was going at you.
We're gonna have some fun. All right, let's move on though. Let's take a peek last at Bitcoin. Then we're going to get into earnings roundup. And then we've got a segment of Jedi options with Coach Tyler, where he's got a stock idea. He's going to run us through 2 different ways to play it through the options market with option strategies, taking a look at some risk graphs and kind of breaking all that down. We'll do that here in just a few minutes. Bitcoin kind of hanging out here, guys, since the weekend, sell-off that brought it back down into the 55,000 level. As it's battling here, I think that's kind of what you have to do is you have to let it battle here and let this chart develop for quite some time till we see a better pattern, something else develop on it that gives us some actionable intel. Matt, let's start with you first here. Anything you want to throw in on Bitcoin?
I honestly not going to have much to say technically other than the defensive nature until we see the pattern form up. But that's a very important part of the pattern forming up, is it playing defense. Because if Bitcoin doesn't play defense at 55K, doesn't hold that 50-day moving average, you're talking about a vastly different technical scenario than when it does. So good news, 3 days in a row, we've held it. Bad news, Ethereum's confirming and running.
I was going to bring up that too.
That's the bad news for Bitcoin. Let's take a look at /ETH very quickly. Ty, can you just give me a technical read on Ethereum?
Well, I mean, so when you had the down gap, I mean, that was the big event that kind of shook. That kind of shook your faith on crypto in the short run. This gets gobbled up. I mean, look at that candle yesterday there. That's impressive. And then filling the gap. So ultimately, when you're looking at the response to a down gap candle like that, it's either the thing starts to fill the gap or you see continuation lower, and it got bought, right? And now it's filling the gap. So if you apply that to Bitcoin, it's the same question. What are you going to do? And you're right. Today, Ethereum's starting to fill the gap. Bitcoin's not. It could just be a one-day thing, right? But certainly today, you're like, hey, Bitcoin, what's going on, man? Why are you lagging here? I don't think there's a trade until it breaks one direction or the other, though, as you said.
Yeah, it just feels like this is a moment for silver and not gold.
Yeah,
i.e. Ether, not Bitcoin.
Ether, not Bitcoin. Yeah, the Ethereum chart, when you brought it up this morning, Matt, it caught my attention as well. It's got relative strength to it, and it held that pivot point at 2,000. I think it's substantially a different chart read.
Yeah,
and we don't have as much data here.
Well, none of that, Tim. You got momentum in the trend.
Yeah.
Like at this point, you are flat out neutral, and you've had zero momentum in Bitcoin for quite some time now. Some time. And here's Ethereum and Ether just gangbusters. You got to be very impressed.
I am impressed. Speaking of impressed, obviously great job there. We're going to do an earnings roundup next. And Matt, I know that you got a couple other companies that you want to take a peek at.
Yeah, we talked to. Go ahead, Steve.
Well, I was going to just say, we'll see if we're impressed with their numbers and their market responses. So let's run through them. And then I got a couple corporate items.
Well, impressive might not be the word I would use today. Okay. I might choose a different word than impressive, but it wasn't horrible. Let's just put it like that. It wasn't horrible. There's some good, there's some bad. There's not a lot of ugly, and that's a good thing. But let's first start with Netflix here, and the gap down to 7%, trying to fight for that 200-day moving average, and it had its chance to shine. It had the analysis coming into it, Tyler. You had a higher low coming into a breakout channel, only if, but Netflix didn't. But they did report a fantastic EPS number, and there are some positives to talk about here. Let's go through the raw numbers. Number one, the EPS came in at 375 versus the expectation of 298, so a very decent beat on EPS numbers. Revenue also came in at 7.2 versus the 7.1 billion in expectation. That did represent a 24% increase in year-over-year revenue. All very fine so far. Also, revenue, they did, after all discount, bottom line, 1.7 billion in net income, which is beautiful. Just an absolutely beautiful, fantastic number out of Netflix there. They're also going to be doing a stock buyback program, talking about, the evolution of Netflix and Netflix growing up. And I know it's gapping down today, but I do believe Netflix is growing up in front of our very eyes from that deep, aggressive growth company into what we see this industry as, chock full of Viacom, AT&T, Disney, not exactly companies you would, outside of Viacom just in recent history, obviously, but not companies you would associate as aggressive growth companies over the course of the last 20, 30, 40 years. So Netflix grown up a little bit in terms of their $1.7 billion in net income in operating cash. You're looking at a stock buyback program as well. All good so far, which means the investors are happy so far. Correct, Tim?
Yeah.
Investors are happy so far. Now let's talk about the growth, which is obviously the most important metric for Netflix from a price action perspective, and that is sub growth. Sub growth missed, and sub growth didn't just miss a little bit. Sub growth missed a tremendous amount, and we got to be honest with that. The expectation was 6 million. They came in at 3.98 million. They missed tremendously on their own sub growth goal. That's the causation of what is driving this price down here today. It's really blowing up that potential 560 breakout, and we're back down into neutrality in a in most likely a fairly degree of amount of time before we see that potential breakout line up again. So a little concerning on the sub growth. I think we're a little bit overreacting to the sub growth. Obviously, we're coming out of the pandemic, and Netflix had massive growth during the pandemic. Netflix themselves have warned they're going to see a contraction in the growth from a subscriber count perspective. So I don't think we should be surprised here today regarding this. But again, it is concerning that the gap down occurred. It is concerning that it blew up that pattern. It is concerning that the growth side of Netflix is not growing. We do say about growth, right? To grow, you got to do what, Tim?
To grow, you have
You
to
gotta
actually
grow.
grow. Yes,
You got to
you
grow,
do.
right? So we're still growing, but we're not growing at the same rate. And that's a little concerning. Outside that, I do think the investors are coming away after everything fairly happy with where Netflix is Netflix is at from a fundamental perspective. Technically, obviously, people were wanting a breakout, did not occur. I think that trade's over.
What was their raw profit again? I mean, they made a pretty good
1.7 billion.
$1.7 billion in profit after a company that puts so much money into content.
By the way,
It's
$17 billion this year in content, and they're still going to be profitable. You got to give Netflix a hell of a lot of credit when everybody said they couldn't do that for like 10 straight years.
yeah, they were getting criticized day by day for the better part of a decade.
They
Look at
forced the entire industry to change to them.
I don't think there's any trade here, Tyler. I think it's complete
No, of
stay
course
away
not.
in the short term, obviously with a gap down into support. Being down 7% is around the market maker expectation that was set yesterday. So, it's a miss on exactly what Matt talked about, the subscriber numbers. And when you come in as a company, you tell us 6.2 million and you put up 4, the market's going to punish you most likely in the short term. That's exactly what happened here. Matt, do you think the 1 million number they're projecting is now one of those, let's lowball so we can come out and beat maybe a little bit more easily? I don't know. We'll see. But take
Wait
a
a
look.
second. Did you just say a company will lowball their own numbers just so they can beat? That does never. That never occurs.
Never set the bar low. So you can
Companies in the S&P always put accurate forecast out there. Ask Apple. They've always done it.
Sure. Yeah. Little tongue, not even a little bit of tongue in cheek there.
No, there's a tremendous amount of tongue in cheek there.
That's
Yeah.
right. But give me the weekly chart
Yeah.
real quick. Give me the long-term read on this, because I think the point you made about investors is got to be the key point here, guys. It's just a consolidation for a couple of years. We were excited about the potential for a breakout if they could smash it. They didn't. So you're still probably going to be watching this thing consolidate as it develops and as it continues to make money and move its business model forward.
Can I just paint one picture very quickly? Okay. Let's say Netflix isn't public and we're not talking about Netflix every day, but you're just a passive investor in a private company. And you've been a passive investor in that private company for 10 years. And as a passive investor, you have not been able to cash your dividend at all. You've just had hypothetical growth that you couldn't cash in. And all of a sudden, that company you're invested in says, we're going to be paying out the investors. And you're going to be like, no, I'm going to sell.
No.
No, that's no. The investors are happy. This is a step in the evolution. It's a good thing.
That's right. All right, what you got next here? Actually, real quick, Matt, there's a convo going on in the chat. I want to answer one quick question for a team member out there, Wayne McKenzie. Just Wayne, real quick, my thoughts on DHR. I'll give them to you really fast. I love the potential for a high base breakout, but they have earnings tomorrow, BMO, before the market opens. So you kind of have to either wait on that earnings report, watch the market response to it for a trading setup. If you're investing in DHR, obviously it's a different combo. But
Danaher, we'll obviously talk about Danaher tomorrow during earnings roundup. But the beautiful thing about this is you have potential here post earnings.
Mm-hmm.
And you really kind of have that same Netflix type read without the tremendous amount of wick nonsense you have to deal with on Netflix. Look at that weekly chart. You've had prolonged weekly consolidation on DHR. You're looking at the top end of the chart. Earnings can absolutely be seen as a catalyst to start a leg. And so, although, it's always that as a trader, it's always like, oh man, maybe I should just front run. Right. You always have that, but you got to be consistent. And remember what I always say about these opportunities. If the move tomorrow is legitimate, it's not just going to be legitimate for a day, but it's going to be legitimate for a quarter. We can be patient.
Mm-hmm. And the market maker expectation is only 2% on this company. So it's not like I'm expecting.
Oh, so you're telling me I can front run?
You might be. Like if you're willing to
It's a less risky front run than Netflix was.
Yeah, sure.
Slightly.
Sure
Anybody who said we're going to front run Netflix, though, you should go to therapy immediately.
No, you don't do that.
Immediately.
All right. Let's keep rounding them up. What you got next there?
No, and by the way, Tackle Trading knows we never front run. And when we do talk about front running, it's more from a technical perspective. So for the new people out there, no, we're not looking to buy call options in front of earnings. We're going to have volatility crushes.
No, we're not going to do that. In
No,
fact,
we're
we're going
not
to
gonna
talk. We'll talk volatility on next week's podcast. Actually,
We are going to talk volatility crushes. I'm excited
be
for
a
it.
fun one. Yeah. All right. Verizon next. I'm thinking maybe.
It was. Verizon was absolutely next on tap. And let's take a look at old VZ here. Verizon comes in with $1.31 versus expectation. If you want to talk about just how boring Verizon is, Verizon's down 9 cents? Yeah.
Yep.
Well, that's slightly more than the 2-cent beat they had. So they're about as boring as it gets. They came in at 131 versus 129. Revenue came in, guys. This again, how boring it is. In fact, the oil inventory numbers should hire Verizon. They should, because their numbers are always accurate. 131 versus the expectation of 129. Revenue came in at 32.9 versus 32.5. They reaffirmed guidance. What are we doing? Like, it's Verizon. Moving on.
The well-run company.
Go away.
32 billion, right?
32 billion in revenue.
Do you think there'll be a time in our lifetime where Verizon's making 100 billion a quarter?
Yes.
Yeah, I do. Yeah.
Yes. And yes, that answers the investment. Yes.
Yes.
Yes, it does.
Juggernaut.
They're a juggernaut.
Expanded.
But then again, Tyler, if there's a day that Verizon's cashing in 100 billion, that means there's a day that Apple's cashing in 270 billion in a quarter.
Oh, sure. Yeah.
You know what I
mean?
Yeah.
Well, so here's the other thing.
I think that means you and I are extremely bullish on the market for the next 10 years.
For the next 30 years.
Yeah.
But one thought on Verizon, though. I mean, with a dividend paying company, the way that people who invest in this company do not mind boring, and the fact that they can just post numbers, Matt, and you're like, okay, 32.9 billion over 32.5. Great. Keep paying us a dividend. That's what Verizon investors like, right?
Yes. You know what else they like? They like not having to micromanage with put options every single quarter too. Oh, they do like that too.
No need to ever hedge Verizon. So.
Let's go ahead and take a look at some semiconductor out there. Not a U.S. company, but let's take a look at ASML, massive company out of Europe here. And the reason I want to bring this one up, nice little gap up here, threatening a breakout. I do want to cross compare against the semis, Tyler. ASML comes out with 386 versus the 308, a really decent beat on EPS numbers. Revenue also beat the expectation of 4.6. They came in at 5.3, so a nice healthy beat on revenue numbers. The shocking number, which is obviously understood when you think pandemic and what was transpiring last year in the first quarter, 95.4% increase in revenue, guys. I mean, that is a headline number. Again, understandable given the fact that our economy was basically shut down and semiconductors weren't selling any parts last year. So understandable, but a real good number there as well. Headline number, gap up, threatening a breakout here. Very healthy price action, Tyler. First and foremost, what do you think of this potential breakout? And secondary question, we're going to be getting a few more semiconductors coming down the road here in earnings. what do you think secondarily of the semiconductors? And I'm looking technically here, Tyler.
Yeah. I think ASML looks good. I mean, every breakout has made you money for the last year, so why second guess this one? Particularly because it comes on the backs of a really good earnings report.
Yeah.
So yeah, what's not to like? I mean, it's constructive. It closed below the 20 MA once, came right back. Break over 650, I think, is a buy. Yeah, looks good. Now it gaps a little bit because it's an ADR.
It is,
but makes it a little bit easier of a position trade than a swing trade. Outside of that, yeah, I think it's clean over 650.
Yeah, I like it. Like
I
that
do
space.
as well, but there's no way I'm playing that over AMAT. So if
No. There's a reason I brought it up and was asking about the semis, because there's no way we're going to trade that one over Applied Materials or, quite frankly, and it has nothing to do with the quality of that company. That company is a perfectly fine company. It's just not going to be traded over about 7 or 8 other semiconductor companies that just people love.
Agreed.
Right. It's not a negative towards the other one. Just semiconductors, we all have our 3 we love. Not one, we have our 3 we love.
We do. I love I know mine.
I know mine.
Tyler, do you know your top 3 semiconductor stocks?
I do, yeah.
Okay. All right, let's guess now. I think Matt will say AMD. Okay, AMAT, and probably Qualcomm.
Do I have to tell you?
I'll second that. I mean, you said AMAT, Qualcomm, and AMD.
Yeah.
Yeah, I'd probably go with that.
You guys went with Qualcomm over Taiwan? Like, what
TSM
is going on here?
I didn't think about TSM. Qualcomm's been killing it lately.
Taiwan Semiconductor? I've been fighting, especially you. I'm offended. You know our internal conversations on Taiwan Semiconductor and how many times I have
NVIDIA.
No, not over Taiwan, not over AMD, and definitely not over Applied Materials.
That's how many good companies are in that.
Hey, at least you didn't guess Intel.
What?
Intel's going to be reporting earnings. We'll find out.
I'm not 180 years old yet.
All right. Any other earnings reports grab your attention?
Real quick, Matt. SMH looks good today. Held a key support zone.
I like it.
Right at the 50. Yeah. You needed that to maintain the constructive nature of semis. So good move today.
All right.
Carry
that's
on.
all I wanted. Next, let's go to CSX.
Nice. Railroad company, right?
Good old-fashioned railroad company breaking out of the all-time high, breaking out of $100. I want to get Tyler's technical read here in 1 second. Their earnings numbers were not very exciting. Let me put it like this. This technical chart is far more exciting than these raw numbers are. Raw numbers, 93 cents against 95. Raw numbers, 2.8 billion versus 2.8. And that is honestly all I have on console because they don't provide guidance. Breakout though, not a lot of selling here. What's your read here, Ty?
So would the argument then be that just tells you how much people like cyclical stocks right now?
Honestly,
it's just in a good industry.
I think the argument is, why can't other Canadian railroads buy us? Like, I don't know what the argument is, quite frankly.
Yeah.
I do like the breakout.
Oh, of course. Yeah. I mean, this is, I think this is a great example of what we would call a position trading stock versus a swing trading stock. Not a lot of fantastic swing moves in the last year, and yet it's gone from $60, $55 to it's doubled, right? So yeah, what's not to like? A breakout of a whole round number, $100, all-time high. You got strength. Yeah, it's great. It's great.
$100 breakout on earnings report on a railroad company makes me think of Jesse Livermore. He would
it does, doesn't it?
Breakout, yeah, the $100 special. He talked about that in that book.
But the difference would have been he would have been day trading on the New York Stock Exchange floor in like 1913, cornering the market as a 22-year-old.
All right, that's an interesting thought. Wouldn't you have loved to have been on one of those old stock exchanges with the chalkboards and the whole thing? I mean, back 100.
No, I would have loved those, not just because of the the games that you would play just to fool people on the
Sure.
exchange. Like,
Could you imagine, Tyler, the old traders, the way that they used to have
oh man,
markets?
You just walk by with an eraser, just start jacking with people, you know.
you add a little thing to the I to make it an L, right? You just mess with
Yeah.
people. Heck yeah.
You know the guy with the best handwriting was the chalkboard guy,
Oh, guaranteed.
right?
And you know that was their version of Tyler Craig.
Yeah, that's right. That's right. All right. Any other earnings roundups there, Matty?
No, I'm done with earnings today.
A couple of quick stories, if we can. Dish Network, DISH, they've been in agreement with Amazon to be a key partner in developing its planned 5G network. Announced they're going to be using the AWS storage for them exclusively for cloud storage. I just saw the breakout, saw the price movement, and maybe want to go dig into the news as to what this is. Obviously, the markets are cheering it and applauding it. Tyler, is there anything there technically? And I know we got earnings coming up, down there. I'm looking at it on the bottom right, but anything interesting?
Hang on. I didn't follow that. So I thought Dish Network was a cable company or satellite company. So how does that correlate with AWS? I'm not technically savvy enough to have caught that on the first pass.
Under the deal that they announced just today, this morning, the market started taking off even after the cash open. Amazon's cloud service and equipment is going to run the core elements of their network, which is now under development.
Got to store everything somewhere, Ty.
They've got this
Gotta
big
store those
Dish,
on demand
Dish is
somewhere.
storing their stuff on AWS.
Mhm.
Yes.
And people must love the fact that they're already securing a contract with AWS. The markets are.
Were they not
applauding.
already storing it with somebody, or
They didn't have anything in place yet.
Well, they probably did. They just probably didn't have
Not a
anything
contract.
major.
Like,
Yeah.
if I was Amazon, I'd market the crap out of this. I'd say, look, if you make a deal with us, your stock price is going to go 5%. You guys should be paying us to use our crap.
Well, where do you think Netflix houses all their stuff? AWS.
I don't know.
Yeah.
It's just impressive, and maybe I'm just ignorant, but I think it's just impressive that they had to make a deal with somebody.
Yeah.
But because they chose Amazon over somebody else,
It's interesting, isn't it? Yeah.
Well, and the amazing thing is anybody can make this deal by signing up at AWS. That's all Dish did. Like that. This is not a major deal. Right. This isn't a major merger. This is not major news. This is we're going to use AWS. But look at the price response. It is impressive.
Are we in a position where that's almost like changing our utility company?
Pretty much.
Who provides our electricity
Pretty much.
now?
Mhm.
Amazon. You guys are worth 10% more. Why? Why we do
It doesn't make any sense.
It is a nice little breakout, though. You got to give it that. All right.
Oh, that's great.
Another one here, an IPO that I was not on the radar of, Path. Uipath is the company. Just started trading here today. Obviously, I don't trade IPOs, but I have
PATH, the ticker.
PATH. Yeah, that's right. And I just have interest in who this company is. I'm going to dig into them a little bit more here after the show. They automate software, repetitive tasks for offices, corporations. They booked about 700 million in profit last year alone from selling their services. It's having a huge introduction to the markets here today, way above the listed price that the NASDAQ had set for them before the IPO. So I'm just interested in this IPO. The market response now is very, very positive. So I'm going to put them on my IPO radar and watch list to watch over the next little bit. You ever heard of this company, Ty?
No. In fact, the name looks weird. I don't even understand.
Uipath Inc. I wouldn't worry about that. They're UI.
No, I do worry about that, Tim. If the name doesn't look right,
if the name doesn't come in smooth.
No, I've never heard of it. Never heard of this stock. But
Sounds like a Utah company.
That's right. And then a couple other quick upgrades that I saw that caught my attention, and we'll just flash through them. Then we're going to get into the Jedi options segment. Pepsi got an upgrade from UBS. We like consumer staples lately. UBS must like them as well. Post earnings starting to move up towards that resistance. Let's see here. AutoZone caught a downgrade from Bank of America after a huge run up, just citing that the price had gone too far. They moved them back into underperform from neutral. Netflix actually caught an upgrade on their earnings report here today. Somebody did not mind the subscriber miss, said it was a little bit overblown. Stifel upgraded them to a buy. They like the valuation long term. And then Morgan Stanley on the back of strong.
I'm more on that one, by the way, than I am on a sell. I'm on the side that I actually like the earnings report out of Netflix. concerning is subscriber growth, but I don't think it's scary at all. Like, okay,
You love the
par for the course.
profitability in the business and what it's done and all those things.
Oh,
Yeah.
I love growth companies that evolve into companies that you can do other things on.
That's right.
Can I ask a quick question on Netflix's revenue?
Yeah.
How do you make the business decision as to whether or not you want to spend 17 billion or spend 16 billion and make another billion in income?
How do you make that decision?
Yeah.
What star am I trying to sign?
Okay.
If I have to,
I don't know.
Spend another billion to get Dave Chappelle and all the great comedians to do more specials and get people on the platform, maybe. Am I bringing all of the content over from one universe of movie theaters or whatever it may be? I don't know, but they spend a lot. It's a good question, Tyler. How did they come up?
Probably has about 45 different divisions in their entertainment segment that all run their own budgets.
Yeah.
And so they're probably just all adding up with their proposals saying, and Netflix says, how much money do you need?
But you've got to be in a good position where you're like, guys, we want to make another $1 billion in profit this year. So we're slashing your budget by, 7% or something.
That's right.
Now, that's not how Netflix works. Netflix says, if we want to make another $1 billion, we got to spend $2 billion.
Yeah.
That's what we got to do.
Who am I to second guess that? It's been working well. Right?
That's right.
Listen, it's made it has forced the industry to evolve to them instead of the other way around. That is impressive.
Mm-hmm. And then two last quick ones here. Morgan Stanley got a buy. Bank earnings have been strong. Berenberg upgraded them as well. And then United Health, the healthcare sector we looked at earlier, they got an upgrade to a buy as well, just on the backs of their earnings report last week. Let's do our weekly segment here, Tyler. Last week we started, a little thing we did, and I believe we've come up with a name for it, Tyler. I like the idea of Jedi options here because you love Star Wars. You are the options Jedi, and we're going to go and you're going to use the Force to compel us to understand these option strategies, correct? And identify them. You're going to use your wizardry and bring it in here. Tyler has one stock, okay? And he's got two different ways to play it in the options market. And so, Tyler, you're up. Show us what you got. And then Matt and I have the fun job of judging you, which is always enjoyable.
Yep. Today's pick comes from the consumer staples sector. I love this sector. We liked this sector coming into this week because of the little breakout pattern. I also like it because when the rest of the market got a little dicey in the last couple of days, staples held up quite well. So from a diversification perspective, this isn't adding another tech stock on top of all your other tech stock plays. It's a staple stock and it's relatively stable and it's got a really good technical pattern. So Walmart is my pick for today. And from a technical perspective, a couple of things I really like. Number one, I like how well this thing's come back over the past 6 weeks. If you were listening to us 6 weeks ago, one of the things we talked about was the dip in Walmart, the dip in Costco, and how every dip has been eventually a buying opportunity. Nice that you didn't have to wait that long on Walmart coming back. But I really like this high base pattern over the last couple of weeks, right at the gap, the down gap from earnings. And one of the things that I've noticed again and again and again is when you have a gap area like this, they tend to fill. It's an area that doesn't have much by way of resistance. And so I feel like now that we've taken out the gap area, path of least resistance is higher. Doesn't have to be, it can do whatever it wants, but this is the type of pattern that I like to trade. So I like Walmart for a mildly bullish trade. So I'm going to present with you two different ideas, and then you can tell me which one you like best. For a staple stock, they're kind of boring. And so I like how you can layer in options to enhance the potential return to make it a little bit more interesting trade. Obviously, you could buy Walmart outright and do a little swing trade, but I'd like to increase my odds and potential payout by using options. They are quite cheap. When you take a look at the implied volatility, the rank is relatively low. This is probably just a little aberration here, but the IB rank is low. So options are cheap, which means I'm not going to get paid much with a bull put. So I'm looking to buy options in some fashion. I'm going to do a call spread. And that kind of leads me to one of two ideas. Either I do something a little more directional, like a bull call vertical, or I do something a little bit more cash flow, like using like a poor boys covered call also known as a bull call diagonal spread. And so I'll start with the less directional of the two, and that is the poor boys covered call. There's a lot of variation with these in terms of how you can build them. So you might have two different traders with the same idea, use different strikes and months. That's fine. But conceptually, we're buying a longer term in the money call, and we're going to sell a short term out of the money call against it. And so for me, I like to, and actually now as I'm talking through this, I think I did something similar in the last segment last week. So the repetition hopefully will help this sink in. But what I like to do to really amp up the ROI is to buy a 2-month option and sell a 1 month against it. We're going to stick with the monthlies because we got better liquidity than the weeklies. So I'm going to go to June. I'm going to buy an in the money call option. Essentially, this is going to be my substitute for buying stock. So if you're thinking about a poor boys covered call instead of buying stock, I'm going to buy an in the money call option that behaves like the stock would. And when you look at the pricing here, I can pay $5 to get a 55 delta. I can pay $8 to get a 72 delta. I can pay $12 to get an 85 delta. I don't want to pay $12, I'll tell you that, too expensive. So that brings it down to either buying the 135 strike or the 140 strike. From a cost perspective, if I can make it work with a 55 delta, I will, because the cost is going to be lower and the ROI is going to be higher. This above pretty much any other trade, you really got to use a risk graph to nail down the right profit zone. So I'm going to try. I'm going to buy the June 140 call, and I'm going to sell the May 145. 145. It's a 35 delta. You're going to get about $2. I would be okay if somebody wanted to sell the 146 or the 147 or even the 144. But when I look at the chart, I feel like 145 is a pretty realistic target for where this can go. So
and I'll cut in on that as well. One other thing that grabbed my attention, that volume right there on the 145. Sometimes those 5 strike price numbers tend to get a little bit more action. So you got to, and they're all liquid, don't get me wrong. But if there ever was like a tiebreaker or something, the fact that volume and open interest so substantially higher would grab my attention.
Fair point. Yep. For sure. For sure. So I sell the 145 against the 140. It's going to cost me $3. And the risk graph is really what tells the tale here. This is what the graph looks like. Okay. Relatively similar to what a covered call looks like. I'm paying $300. If this gets up and sits right at 145, I can make $300. That's a 100% return, which is fantastic. If it goes higher, that's fine. I've still got like $150 to $200 profit if it really takes off. So the ROI is very, very high. And we're talking about Walmart here. This is not Netflix, right? It's not a momentum stock. And yet I'm able to use the leverage and options to generate a nice potential return. The other thing I like is my break even is below the current price. And so your break even's at 140. As long as Walmart ends above 140 in a month, I'll have some kind of profit. That gives me the positive theta component. So if this goes sideways, I'm still going to generate a little bit of profit. That's the first trade idea.
Stay here for 1 second. Open up those price slices for me if you can. I just want to check the math on a couple of different things.
Sure.
So the net theta here, we've got a $300 cost. Your net theta is $1.53 a day right now, right? That will increase over time as those theta numbers change as time passes. We've got a 30-day option. We've got a 60-day option. Now that's on a net cost of $300. Now, if I unlock that net cost for 1 second, if you can, just come down here where that lock is. And we don't have to go back in the options chain. Just flip it from from June to say the next one, July. So cost goes up about 70 cents, it looks like 80 cents, something like that. And my theta would only increase by about 0.75 at current print. So this is where in this type of strategy, you start with your base rules, and we'll go to the playbook here, and I'll at least explain what the playbook is. So people who out there who've never studied these option strategies, if you're not yet a pro member of Tackle Trading, you can go through some video tutorials and rule guidelines on how to play a diagonal bull call spread, which is what this is, Tyler. But I actually like the June-May composition. I just wanted to look at that real quick to see how much more in cost I had to pay if I went out to get July. Okay. Matt, any thoughts on this spread before Tyler shows us the second one?
No, diagonal spread on Walmart here makes a lot of sense, even more so than a horizontal spread or even a covered call, quite frankly. So I do like the diagonal spread here. And A lot of times when a company like Walmart, a staple company, very boring company like Walmart, gets into that implied volatility range of 18, 19, 22, 23, it's just so stinking tough to do things like covered calls and to get a decent enough return on a covered call to justify the capital allocation. And so adjusting that to a spread, i.e. a horizontal or a diagonal spread, makes a lot of sense. And so, yeah, if it'd be a conservative way to play the breakout. I do think there are more aggressive ways you can play the breakout on Walmart if you want to take it directional. But if you're looking for a conservative option strategy, bring in a little cash flow, take some directional component, take some directional risk. This makes a lot of sense.
Yeah, I agree. What's the one we're going to compare it to, Tyler?
Yeah, so the comparison is going to be just a vertical spread where I'm buying and selling in the same month, right? So you're going to have a little less time decay, and it's going to be more of a delta play. And I don't think we need to really overthink this one. Primarily, I would go out to probably June to give myself a little bit more time, makes it more of a position trade. I'd buy the first strike in the money, which is the 140 strike. And then I would just sell the higher strike, the 145, right? And so I'm paying around $2. I can make 3, which makes it more of a 150% potential return. And my theta is slightly negative, but it's cheaper cost. Verticals are almost always cheaper cost than diagonals. So the appeal here is I get a cheaper cost at $200 instead of 300. Still looking for the stock to go above 145. If it does, I'm looking close to a 150% return. So I get a higher ROI in exchange for taking a little bit more of a directional bet.
Okay, and go back to the option chain on this one. The only question I have for you here, 140, 145 is fine. It's a $5 spread on Walmart. Walmart's not a fast mover, but when you don't have that big a delta difference, it ends up, it's going to take a little bit more time in many ways to develop, right? 55 minus 37 gives me a net 18 delta. The only question I have, Tyler, why not the 140, 150 here? Open it up a little bit. If we're going to play it directional, I kind of want the potential reward of that. It won't mitigate my theta as much. I'll probably carry more negative theta in that regard, but I'm still balancing it away from just a long call option. Why the 5 spread and not a 10 here? Because that would be the only debate I would have on the vertical side of it.
Yeah, I don't have a problem with the 10. I don't have a problem with the 10. I think it's just me knowing it's Walmart going for a bigger directional play. That's more of like a, I don't know, +3 type bias. I'm just defaulting to being a little bit more conservative is all.
You don't think you can get to 150? You think you can get to 145?
Right. Yeah.
150 is a real big move for Walmart.
Yep, it would be.
But I do like that 140, 150 better than just straight buying calls. I mean, you do at least reduce the cost by a good 30% or so.
Which one do you like, T?
Oh, I like the vertical.
You like the vertical?
I do. I mean, I completely would understand why. And I love bull call diagonal spreads. Don't get me wrong. I love that strategy. I think it's a wonderful strategy for people to learn. If you're at the type of your progression as a trader where you've learned how to do a long call and you've learned how to do a vertical, which is usually the second strategy somebody's going to learn in that progression. Maybe you know how to do your covered call system, but you never got into the time spreads. I think diagonals are a wonderful strategy that everybody should at least put some time into learning and understanding to put it into your toolbox if and when it's appropriate to use it. Low IV to get positive theta and a positive delta on a stock I feel very confident in. Yeah, I can see the diagonal. I have no problem with the diagonal. I just think the vertical's in play. I like staples enough right now to where, to me, the directional, I want the delta, really. Maybe I'm getting greedy on this one. I want that delta. I want to have the upside so that if Walmart does trend as staples recover and continue to push into new highs, that maybe I can catch that 150 run. So what about you, Matt? Which one are you leaning?
I think there's a lot of ways to play Walmart right now, from very conservative to a little bit more aggressive. I mean, you're never going to get to the point where you're like, I'm going to go YOLO and buy out of the money call options on Walmart. That's just not who this stock is. For me, I'm going to keep it simple. I do like Delta here. Like I just do. I like directional risk here because I do think, you get into 145, you want to take advantage of that. But I'd also, I'm going to come off it a little bit. And Tyler, what do you think about, I know we're doing a little more deep dive in just options here and, geeking out on options. What do you think about just buying a call option on Walmart?
I don't mind buying a call option. I would go a little bit longer term.
Yeah,
I think
that's why I asked.
The thing for me is if I'm going to buy the 140, June 140 call, I feel like I'm willing to cap the gain at 150 in exchange for cutting my risk by 30%. So if it's hard for me not to do a $10 spread over a long call.
So if it was just, hey, let's take advantage of the directional, you're not going to get above 150 anyways. So you might as well sell it. Yeah. Okay. I'm with you there.
And I feel like the ROI is high enough.
Yeah.
To where you're not going to be mad.
Okay.
I mean, you're not going to be mad if it runs too much because I have so much upside.
Because I personally would rather take a little bit more of a delta position here, I do like the spread. Whether you're talking the 5-point or the 10-point, depending on how you want to approach it, I'm fine with either one. I do like the vertical spread here, but that diagonal one is a really good way to go about it as well.
I love it, Tyler. I love this segment.
I love this segment.
Yeah, the Jedi options.
I can't wait till Tyler brings us an 8-legged spread though.
Tyler, are you truly Jedi or are you a Sith Lord?
He's Jedi, bro.
Of course he's Jedi.
What are we talking? Like, how is that?
I've never had a Sith thought in my life.
In fact,
how dare you?
You offended his metachlorians just by asking if he had Sith blood. Like, no. Tyler looks at Obi-Wan and he's like, that is my hero.
Did you watch? I'm sure you love Star Wars. You watched the new series that's out on Disney Plus. Yeah,
Mandalorian.
Yeah. This is the way, my friend. This is the way. All right, guys. I had one question in the chat. We'll kind of wrap up here on, and I think they were just chattering. Swin and Jable, a lot of the regulars are looking at Microsoft right now. They're asking for a read on Microsoft. Let's give a quick one. Then we'll wrap up the show here. Tyler, give me a read on this company.
The issue you're going to run into with every large cap tech stock right now is earnings, right? And so fundamentally, you just have to ask yourself, am I willing to do something in earnings or not? And if the answer is no, it's a moot point, right? It's basing at its high. It's constructive. Yes, it could be a breakout over 261.50, but I wouldn't buy a breakout over 261.50 a day before earnings. And so I guess what you're hoping is that it continues to base, and then maybe the earnings is the catalyst and gives you a breakout without a big gap so you don't miss it. To me, I think this is a post-earnings trade. You queue up a trade, but it's all about how does it react to earnings that drives how I want to trade it.
Yeah. And with a Microsoft, for me personally, the way I approach these types of companies, if they are longer term investments, not short term trade setups, I'm not going to hedge this Microsoft. The market maker move expectation next week. What is Microsoft gap? 2, 3, 4% at the most?
Not a lot.
It's not a big gapper. It just really isn't. It's pretty well behaved. So we'll take a look at it. We'll break it down a little bit later, but I think Tyler's right. You got earnings coming up next week. That will be the convo on so many of those companies. Guys, that's our show here for today. Let's get final thoughts from the team. Tyler, you first. You're our guest. Final thoughts.
I just, I'm happy the market's bouncing back. Small caps are now up 2%. Sometimes by the time we're done talking, what we said at the beginning is not as relevant. I'm happy to see the market follow through here and confidence in bulls restored, I guess. So, look, I made money today. I'm happier than I was yesterday. I mean, not that my attitude is impacted by what the market does on a daily basis, because I'm so Jedi, okay? But I mean, if it did, I'm definitely happier today than I was yesterday.
Maddie, final thoughts from you, sir.
Tyler's final thoughts are perfect.
I agree. I'm happy.
Yeah. I'm not motivated at all by the market. It doesn't impact me. I'm an assassin. I'm a Jedi. I'm a Sith. I'm everything. And if I make money, so what? If I lose money, who cares? It's a random Wednesday for me. Let's roll. How was that, Tyler?
I'm not buying it, but it was well
Okay.
delivered. It was well delivered.
Okay.
So we all actually do have emotions. Yes.
Yeah. Yeah. We like making money. Yeah. We're happier when we make money. Yes.
That's exactly right.
Yeah.
I will tell you this, though, guys, if you are looking for more content from Coach Tyler, he will be back on our YouTube channel tonight, 7:00 Eastern. Tyler, you're back to defend your win from last week right now. And I don't think you know your challenger, do you?
Oh, no, don't tell.
No,
Don't
listen,
tell.
I saw it.
Oh, you did?
You're the one who put it in the weekly notes that you posted on the public channel on Slack.
I did put it on meeting notes.
Tim assumed that nobody reads his Slack messages.
That's right. I didn't think you dug into those, Tyler. I'm very happy.
You know what?
That you did.
I'm a curious chap, and I wanted to look at it. So yeah, I got Jake
coming very soon to Tackle Trading. Tim posts a Slack message that says, "Please respond if you ever read my messages."
I'll put a little Easter egg in there. I'll drop like little quiz
Just
hints.
give me an emoji. Give me something.
Give me something.
Yes.
Let me know that you recognize that I exist.
That's right. All right, guys. So join us tonight. We've got a young challenger. I'm just going to say that for the community. If you're a veteran of our shows, you know exactly what I'm talking about. He is an assassin. He is a trading monster, Tyler. He's going to come. He might be Sith. This might be Sith versus Jedi, by the way.
No. There's no might. Tonight is good versus evil. Tonight is Jedi takes on Sith Lord. Tonight is Count Dooku versus who do you want to be? You're Obi-Wan.
Who's your favorite Jedi?
It's
I
Dooku
think
versus
Obi-Wan's clean cut. I'd probably be Obi-Wan.
It's Obi-Wan.
Here.
It's got to be. Come on, we could have called that. I could have made a line. My line would have been Tyler says he's Obi-Wan minus 380.
But it's not Dooku.
It's like the New York Yankees winning the 27 series. Tyler's Obi-Wan.
This is young Anakin turning.
I'd peg him as Anakin. That's actually good. Yeah.
Hey guys, don't think we're geeks because we do love Star Wars.
We love them all, and we are nerds and total geeks. There's no doubt.
And for you Star Trekies out there, we like that too.
Well, we got to have Coach Mark here to talk Star Trek intelligently. All right, guys, that's our show. If you've not done it yet, give me a thumbs up, give me a share. And if you're brand new to the channel, subscribe, click the bell, come back and join us. 7:00 Eastern tonight, we'll have Trade Masters. That's when we go live right here on the channel. If you got that bell on, it will give you an alert in your Google as soon as that you do see us go live, so you can come and join us. Outside of that, have a wonderful rest of your Wednesday, everybody.
Still see Batman
tomorrow. I still see it too. All right, guys, we're out. We'll see you.